very, very quick look at what is happening on the individual currencies, what's been moving, what's not been moving. And clearly the US dollar, as we can see here, as represented by the Dixie index, the US dollar has actually broken away from the volume point of control at, where are we? From the VPOC at 101, trading at just under 103. Had a couple of pullbacks here. It's kind of gone into this sideways. It's within the spread of this big up candle from last week. And with the Camarilla pivots we've got here, it's between the R3 and the S3. Now, clearly, if it's going to make any progress higher, it's got to break through this R3. This is what I said about kind of looking at the price action ahead of a key item of news. Now, the FOMC is the key item of news. This is the day before. The chances are, if we're going to see more dollar buying today, it will certainly try and get to the R3. The PMIs this afternoon may have something to do with that. I also mentioned the last time is the dollar is closely aligned to a lot of things, commodities, but especially what is going on in the bond market. And one of the reasons why we had this quite a long period of consolidation is because the 2-year the yield on the 2-year Treasury was also in consolidation, but that has broken higher. It's now, I think, I'll have a quick look. Let's have a look. Where's my 2-year? Let's have a look here. Where are we? And this is really the one you need to keep a close eye on. Got to find it. Let's have a look. No, I'm wrong. One day, I'm sure my computer's going to blow up one day, but we will see. There we are. What's it? 4.3. Let's have a look here. Go on to the day. If you look at that, you can see there was move it higher a little bit here. This is now in a discernible trend higher. This is the yield on the 2-year bond. It's now at 4.3. That's moving higher. You would expect the dollar to continue higher as well. Now, a stronger dollar may also impact what is going on in commodities, particularly. I mean, I read today on a headline, stronger dollar. Perhaps not very good for gold, but that's for another webinar. But what we're seeing here in terms of price action on the dollar, it is very much tied with what is with the market waiting for the FOMC tomorrow. Back over onto the CSI, we can see where the money flow has been. We can see been a rise in the dollar, selling of the New Zealand, and quite a strong buying of the yen. Now, the yen's quite interesting because the Nikkei is doing extremely well at the moment, and possibly some of that buying is reflected in money flow going into that particular stock market. Moving over to the matrix, what we like to see are these numbers. For such a busy time as the London Open is, these are actually quite poor, as we see on the buying side of the individual currencies, plus 38. It tells us that there's movement, but not a lot of movement. The big movement in terms of the strength of the move and the strength of the flow has really been in the Kiwi yen, which is down to -64. What we like to see, if when we have a balanced market, if you like, we like to see some sort of similarity between these numbers. Obviously, that's a sell, that's going to be minus, and that's going to be a plus. But as you can see, a lot of these pairs are very much in the doldrums, as it were. And for the London, for this time of the day, that can be a bit tricky, because what it tells us is it's a bit sluggish, and it shouldn't be sluggish, because this should be quite a sort of lively time. And as traders, especially short-term traders, that's what we want. We want the pairs to be lively. Returning to the dollar again, what I've done is, and I mentioned it last time, is I've created profiles for the individual currencies and their respective pairs. So, for example, I have one here on the majors, because it just gives you a quick eyeball on the chart patterns. I've got the daily chart. I don't have space. I've got the dollar Swiss here as well, but that's not going anywhere at the moment. I tend to keep the dollar Swiss out on its own, but it tells us what's moving. Is it in congestion? Can you see, they're all between these very key Camarilla points, which are the R3 and the S3. There are 6 levels on our Camarilla indicator, and the most important are the third levels, both the resistance and the support. And what it tells us is we have a sideways move on the pairs at the moment. Doesn't mean there's not going to be an opportunity to trade, but as I say many times before, if you also have sideways movement with a narrow range, as we have here, if I just expand this on the euro dollar very quickly, here we have here. That was yesterday, a bit of movement, nothing like the range that we had on Friday. This was Thursday, big range, big sell-off in the euro, which is a continuation of that trend. We've had a retrace back on Friday. Some decent euro buying, but look at the range of the candles. And today, not very much going on so far. Unusual for the London session, but being aware of the price action on the slower time frames, are you in this constricted price range, it is going to have an impact on the faster charts. And we can see that very easily if we go to, say, the euro dollar. And one of the best ways to see it is, have a look very quickly. Okay. I've got a Renko, I've got a euro dollar, that should be 5 minute. A 5 minute chart here. That's the volatility that we saw in response to the flash PMIs. I've got the 15 minute, I've got the hour, and let's move that to the daily. So we see that there. And what I also have is the CSI here. This is the hourly CSI. And this is really what we don't want to see. We don't have divergence. We've got both currencies going in the same direction. Doesn't mean there's not a potential for a trade. What it means is when you don't have this, we want strong divergence. We want one going strongly in one direction and one going strongly in another direction, because we know there is going to be a half decent trend. But what I have also here is the Renko chart. And this is what I was trying to say about narrow ranges. And on the daily chart for the euro dollar, we ended up with a doji. A doji is indecision. And when it's a narrow range, you have a lot of choppiness. It goes up a bit, goes sideways, goes down a bit, up a bit. That is very choppy trading. You may get an opportunity to get a move. There may be enough pips in that move to take. The good news about euro dollar is because there are very tight spreads offered by brokers on this pair. If you are trading for a few pips at a time, and you can afford to go in on multiple times, as it were, and to try and take advantage of this type of price action on perhaps some of the other pairs, and certainly the cross pairs where the spread is much wider. If you have this type of price action on your chart, the spread is going to kill you. You're not going to be able to go in, very, very quickly and come out, because by the time the price will reverse against you by the time you've worked through the spread, and also confirms that try and have a selection of pairs that you get to know, make sure they don't all correlate positively, so that if you are in a position where you're faced with this very, very narrow, and you end up with a narrow doji, you're going to get very, very choppy price action, a lot of whipsaw. Widespread doji, the chances are you may get more of an opportunity. A nice day is to have these nice big ranging candles. So that's what's happening on the majors at the moment. As I said, Euro dollar, personally, I would wait and see if we can get some firm direction one way or another. I'm just going to stop there. I'm going to pass over to David. I think he's been looking at cable, but he will explain, and then we'll come back and I want to have a look at Euro Aussie from last week and also see what is happening perhaps with certainly the Kiwi looks of interest this morning. I pass over to you. Thank you. There we are.